Carl DeMaio, chairman of Reform California, recently addressed the escalating crisis surrounding home and auto insurance in California. The situation has become dire, with many residents facing the loss of their insurance or dramatic increases in premiums. According to DeMaio, the root causes of this crisis are far from what the mainstream narrative suggests. In his detailed explanation, DeMaio argues that politicians and the media are misleading the public by attributing the crisis to climate change. He asserts that this claim is a convenient cover-up for the real issue, the failures of political policies. While climate change is often cited as the reason behind rising insurance rates due to wildfires, DeMaio insists that it is the poor management of forests and inadequate government policies that have exacerbated the situation. DeMaio explains that the severity of fires has increased not because of climate change, but because of the lack of proper forest management. He points out that politicians have refused to allow the necessary thinning of forests, leading to higher risks when fires do occur. This, he says, is a direct consequence of political decisions, not environmental changes. The insurance industry, according to DeMaio, is reacting to these increased risks, which have been created by poor governance, not by natural disasters. As the crisis deepens, more Californians are finding themselves unable to secure insurance from private companies. DeMaio notes that those who do manage to find coverage often have to turn to the California Fair Plan, a government-run high-risk insurance pool. This plan, however, is far from fair, as DeMaio humorously refers to it as the unfair plan. The costs for those in this plan can skyrocket from $2,000 to $10,000 annually, which is a massive burden, especially for retirees on fixed incomes. DeMaio also delves into the tactics used by insurance companies, which are threatening to leave California. However, he clarifies that these threats are not about exiting the market entirely, but are instead a move to pressure politicians into addressing the crisis. By creating a sense of urgency, insurance companies hope to force political action that will allow them to increase premiums without significant backlash. One of the most alarming developments, according to DeMaio, is the proposal of a new insurance tax. This tax would function similarly to an escrow account, where homeowners and drivers are given an upfront premium at the beginning of the year. However, if the collected premiums do not cover all the insurance claims by year's end, policyholders would be hit with an additional emergency assessment. DeMaio is strongly opposed to this idea, labeling it as a blank check for the government and a move that would crush working families. DeMaio provides further insight into why insurance costs are rising, pointing out that it is not just about the number of incidents like fires or accidents, but also about the cost of replacing losses. Due to inflation, everything from construction materials to car repairs has become more expensive. This inflationary pressure is causing insurance premiums to soar as companies try to cover the increased costs of claims. In response to this crisis, DeMaio outlines a three-part plan from Reform California to stabilize and reform insurance in the state. The plan includes slashing costly regulations, improving forest management to reduce fire risks, and implementing rate stabilization measures. Additionally, DeMaio suggests using funds from the state's climate change initiatives to provide rebates to homeowners and drivers, effectively forcing politicians to pay for their policy failures. People in the comments shared their thoughts. When is the Californians going to stand up to our government and enough is enough? Another person added, if you voted blue, blame yourself. Assuming honest elections, which I also doubt. One commenter said, to insure 3 cars in California $380 a month. Same 3 cars in Idaho. Plus a boat, homeowners, and expanded auto coverage like glass, medical, rental, etc. $380 a month. California is such a ripoff. The issues DeMaio raises are not just about insurance. They touch on broader concerns about governance, accountability, and the economic pressures facing Californians. The proposal of an insurance tax is particularly concerning, as it could set a precedent for how the state handles financial shortfalls in other areas. DeMaio's report serves as a wake-up call, urging Californians to take action before these policies are implemented and further strain the financial stability of residents across the state. In summary, DeMaio's discussion paints a grim picture of California's insurance landscape. His warnings about the potential for an insurance tax add to the urgency of the situation. With insurance premiums already on the rise, the introduction of an additional financial burden could have severe consequences for Californians, especially those already struggling to make ends meet. What are your thoughts? To what extent should government policy be held accountable for the rising costs of essential services like home and auto insurance? Is it fair to place the financial burden of policy failures on residents through measures like the proposed insurance tax? How might this insurance crisis affect the overall housing market and economy in California in the coming years? To dive deeper into this topic, check out the full video on Carl DeMaio. Reform California's YouTube channel link is in description.